Good afternoon. This is Tom Asbury with the Viper Report. It's Sunday, December 8th. It's been a pretty crazy week, both on the home front as well as the markets. We started off the week getting hit by a named storm, Ezekiel. You can see it's caused quite a bit of damage, lots of roads, freezing rain. Quite pretty, but not fun to navigate in, and not fun when the power is intermittent. Markets weren't much easier, as of course they started off with a bang on Monday with the tariff man's latest tweet. After 2 days of heavy selling, I looked at the market early Wednesday morning, saw that we'd come down below the lower Stark band, as this arrow point 1 indicates, and reached monthly pivot support. Those of you who watched some of my videos know that that's a pretty important level to look for a potential turnaround. And when I looked at all the markets, that was the favored scenario, but it was the strength of the rebound and the uncertainty of the jobs report that clouded the picture a bit. This chart is from an article to be posted on Forbes.com later today. A special market update was sent out about 8 a.m. Eastern Time on the 4th, showing what had happened vis-a-vis. This is the QQQ. It had gotten down below its moving average. Most of the AD lines had turned negative with Monday's close. We're negative as of Tuesday's close. We're back to positive with Wednesday's close, setting the stage for what was a very strong finish. This is the kind of special updates we do when necessary. Obviously, this is sort of sharp correction. I know my clients want to hear what I think of the market and, if there's any changes in our positions. So I try to send these out whenever necessary. Sometimes those of you who were subscribing during the fall of 2018, we were putting more than one or two out a week. It has been a great market rally since the October lows. If you look in your inbox, you probably can still see this email titled Correction Over. It was sent out on October 13th, showing you that the daily trend analysis using my 80 lines had turned positive, and that was the sign that the correction was over. This chart shows you what's happened to the S&P 500 since that email was sent out. We've gone from around 2960 up to 3145. So a nice move to the upside during that time period of just under 200 points. The advanced decline analysis has stayed positive throughout that period except for last week's brief drop into negative territory. I'm continuing to look for new opportunities. Going into Thursday's open, I recommended the XLP. That's a consumer staples sector select. The buy level was at 62.23. We dropped down to under 62.10, as you can see with this boxed in area on early Thursday, and then closed strong. I still like this position, but at my levels. Investors have been holding on to long positions since the spring. This little box shows at 54.56 we're long. Currently we closed on Friday at 62.67. So it's had a nice run. We took off half the position during the summer and holding on to the remainder. For stock traders, I recommended Illumina, symbol LIMN, on Thursday's update. You can see we were pretty quiet on Thursday in here, traded in a tight range, and then surged to the upside on Friday, closing with a nice quick gain. And this position looks like it could go significantly higher. We may look for an opportunity to add to that position. In the email, I'll have the address for the Forbes article I wrote on the Dow's most overbought stocks on Friday, as well as I should have the new article up by the time you receive this email. Once again, I apologize for not having an update last week, but the power situation was too unreliable to make it happen. I will try to do a number of updates between now and Christmas. Well, I'm just wrapping up the last few students for the last session of classes for 2019, and I'm already signing up people for 2020. If you're interested in learning about the advanced decline analysis, many of you have been reading about it for quite a while. You saw the power of it during that October buy signal. You might take a look at viperreport.com. You can see this link to the course. It'll explain what the course entails, and what you can expect. And of course, if you have further questions, you can email me at tom@viperreport.com. If you'd like to start off the new year with some good trading advice, either in ETFs or stocks, I hope you'll consider one of my premium services that puts you in line for the 6 free trading lessons as well as interim updates in the market. Quite a bargain at $34.95 a month for each service. So if you click on Viper Report, it'll tell you what entails there, or the Hot Stocks Report. Hope you have a good week of trading. We FOMC on Tuesday, but there's a very little chance the Fed's going to act based on the Fed funds futures. That's all I got for today. Take a look at the email and you'll see the links for some other articles. And of course, as always, good success in the markets.